Hi there, I'm Jesse Nicholas, your real estate agent helping you to buy, protect, and sell your home. And today we're going to be talking about the things that a buyer needs to buy when they're buying a house. That sounds kind of redundant. What I'm talking about are things that are not in the contract per se. Of course, your down payment, earnest money is going to be in there, whether or not a seller pays for title insurance, things like that are going to be in the contract, but there are a few things that lie outside of it as well. That's what we're going to be talking about today. And the first of those things is, in fact, earnest money. Earnest money is something, if you don't know, that you give to the seller when you're presenting an offer to show that you're a serious buyer. This isn't additional money, mind you. This money is going to go towards the purchase price of the home. Earnest money is different per transaction, and depending on the house, one type of earnest money amount is not going to work for the other. $500 for earnest money might be great for a home that's, for $85,000 or $90,000. But if you give someone who's selling a home for $600,000 $500 in earnest money, they're not going to take it all that seriously and probably going to think that you're not going to be able to truly buy this home. There's no hard and fast rule about how much earnest money should be per a certain amount. In fact, earnest money is technically not even needed. You can do a deal without earnest money being involved at all. If you want some kind of number to go by though, maybe think of something around the lines of $500 in earnest money for every $100,000. So if a home is worth $400,000, it'd be about $2,000 in earnest money, and that would be very acceptable in most situations by a seller. So right out of the gate, you don't even have an offer in, and you're already writing out a check to buy this home. Now this earnest money is going to sit in an escrow account that does not gain any interest, and it will be released upon the closing of the sale. If the deal goes south and the transaction is not going to happen, you should expect to get your earnest money back in most situations in about a week or so. The next check you're going to have to write is towards a home inspector. You don't want to skimp on this. Don't get just anybody to inspect a home. You want to make sure you have a good home inspector to look the place over and find any issues that could arise before you end up buying the home. You're technically under contract, but before the inspection happens, you have an inspection period where if you get the home checked out and there's something about it that you really don't like, or if the seller refuses to fix it, then you can get out of the contract pretty easily at that point. A good home inspector is going to cost anywhere around $400 to $500 or so, depending on your area. I really advise paying for a proper licensed home inspector. Some states don't actually regulate home inspector licenses. Mine does not, but we still have very good reputable companies in the area that we all like to use. Don't try to go cheap on this and get your uncle who worked construction back when he was a teenager for in the summer, and he's a pretty good handyman. That's not who you want looking at your home. This is something you're going to be spending hundreds of thousands of dollars on, so get someone to inspect it properly. After the home inspector, there's a small possibility that you need to pay for another inspector. A long time ago, I represented a buyer, and the home inspector found some cracking on the corner of a house in the foundation, and it also kind of seemed to extend toward the inside of the foundation as well, and he wasn't sure if it was a problem or not. So my client actually paid for a structural engineer to come out and inspect it. The first home inspector may see that there could be a problem, but they may not know the full extent of the issue, which means you might have to pay for someone else to come out and expertly inspect it. That too can be around $400, $350, something to the tune of that amount. After the inspectors, next is your appraiser fee. Your bank, your loan officer, they're going to send out an appraiser to go inspect the property and make sure that the loan they're giving out is matching to what the home's value is worth. They're not going to give out a loan for more money than what the appraiser deems the home to be worth, and you need to pay for this service as well. It's different from lender to lender, from bank to bank. It can be anywhere from like $200 to $400. I've seen $450 as well. Typically, you're going to write a check to your loan officer and pay for it that way, but I have seen it where a bank puts it as a line to be paid at the end for the closing table and the closing costs. So that could come up, but in most situations, you're going to write a check for the appraiser to go out. I like to make sure that the home inspection period is settled and done with before the appraiser is sent out. Some banks want to get the appraiser out as fast as possible, and there is a good reason for that. Appraisal companies get backed up a lot. They are very busy. Sometimes it can be a while for them to get out and inspect the property, and it can throw off the timing of the whole deal, pushing back the closing even. I've seen that happen numerous times. It's never fun, but I always like to try to save that money if you can to get the inspection period over and done with before you send out the appraiser. It just makes it a little cleaner and easier on you. But again, the situation may deem time is of the essence, and you got to get them out as fast as possible as well. Again, anywhere $200 to $400, maybe $500. I don't think I've seen one higher than $450. But around that amount. So at this point, then I'm going to discuss what you're not going to pay for. So in between this appraisal period and the closing, you're going to be buying a house here in a couple of weeks. So don't do anything like take out a loan for a car or for furniture, don't do it. This can throw everything out of whack, and you may end up even losing the home in the process, because this messes with your credit and your credit score and what the banks have looked into. It may not prevent you from losing your home, but I guarantee it's going to throw your closing date back, sometimes as much as a month, because the bank has to go back and look at all of your credit stuff all over again. So just be wise about it, be patient, wait until after you have your home, if you have the money to go and get that furniture, get that new vehicle, whatever you need to do. Wait until after you close on your house. After this, it is now the big day. This is closing cost. This is the big one. This is going to include your down payment, it's going to include title fees, it's going to include lender fees, all this big stuff in one big check. Do not bring your personal checkbook to the closing table expecting to pay this off with that check. It will not work. Please don't bring cash. That's even worse. I don't know who would bring 20 grand in cash or whatever to a closing, but I've heard some stories. But you need to go get a cashier's check or a certified check, and that's what you need to do to bring to the table. You can do this the day before or even the day of, maybe just as much as an hour before closing, to make sure everything's good to go, and get that certified cashier's check ready to give to them. One other thing that's going to come up is the closing administrator is going to ask if you want a personal guarantee to ensure that the closing paperwork and title paperwork gets handled properly. I always found this kind of funny, because if for some reason you were to distrust your title company and you wanted to guarantee that the loan got handled or the title got handled properly, you're to give them, the person that you don't trust, an additional $20 or $25 to guarantee it. If you don't trust them, why would you give them more money? But hey, it's also 20 bucks, not a big deal in the big scheme of things. Near the end of your closing, you're going to be asked if you want to buy title insurance, and you are going to buy title insurance. I have made a whole other video dedicated to this topic alone. It is not required, but if you're my client, I'm going to advise over and over and over and over again to buy the title insurance. I've already talked about all this in the other video that I'll link in the description below. The long and short of it really is that you just set aside $1,000 for title insurance and have that ready to spend, and whatever you have left will give you enough room to buy one more thing. Hey guys, Jesse here. I've paused the video because I realized while editing this video that I didn't go into really good detail about the title insurance, and I want to take a brief moment to do that now. Sometimes you are able to contact your title company and know what the amount of title insurance is going to be before closing, so you can do that in some cases. However, I will say that in my experience, there are title companies out there that don't communicate very well, so just be prepared for that. Also, I stated earlier that you should have $1,000 for title insurance and that you're not going to spend all that amount, but just have it on hand ready to buy it. In most cases, that is true, but I have seen title insurance go above the $1,000 mark. It doesn't happen very often, and it's usually associated with homes that are higher in value. We're talking like $400,000, $500,000 and on up. But also, too, with those same homes, it might not be that much as well. It just depends on the title company you're using at the time. So just be aware of that. Okay, that's all I have. Back to the video. I'll bet when the house is closed and it's finally yours, that seller is going to give you a lot of keys to the property that no longer belongs to him. You're going to take those keys, go to your new place, and you're going to use them exactly one time, because you're going to take that leftover money from earlier and you're going to buy new locks and new keys. This is the first thing you're going to do before you change anything else in the house. The second thing you're going to do is you're going to buy all new toilet seats and replace all of them on all of the toilets, because that way you're the only one that has used them. Think about it. There you go. As a buyer, you now know the things that you need to buy that are outside of the contract and things you need to be prepared for. So buying a home, there's a little more finesse to it, a little more thought process to it in order to be prepared. You want to make sure that you have the money set aside for these things before you go and write that purchase offer. I want to know though, is there anything I've left out or anything else you can think of that you need to get before you actually end up buying the home? Leave your thoughts and feedback in the comments below and let's talk about it. Thank you so much for sharing the video. Please drop a rating as well. If you're new here, consider subscribing. I put out these videos weekly and I hope to increase that number in the future, so subscribing and ringing that notification bell is a great way to know when I put out fresh new content. My name is Jesse Nicholas, your real estate agent, helping you to buy, protect, and sell your home. I'll see you on the next one. But it's just a way of showing that, hey, I'm not wasting your time as a buyer. Here's some money to prove that I'm going to throw down.
Day after day, Seems like I push against the clouds. They just keep blocking out the sun.